Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart, starting with the first scenario on a daily time frame where we are looking for a bigger 5-wave impulse to the upside, currently working on the blue wave 3 with the wide count 1, 2, 3, 4, and then internally here another 5-wave structure to the upside in the wide wave 5. So preferably in this case, still looking for one more higher high, then get a retracement to the downside in another wave 4. Common target for your wave 4 is between the 236 and the 0.5 Fibonacci, taken from the low of 2 to the potential high here of your wave 3 around 110, 112k, giving you a target between 99.1k and 85.1k. However, a wave 4 of a higher degree, being the blue wave 4, tends to retrace to the price action of a lower degree, which is the wide wave 4 price action, giving you a target between 91k, and then of course you have the high over here, that wick sitting at about 104k. Still, the 236 from a Fibonacci perspective is generally a minimum target. Now on the 1 hour time frame, it then looks like this. On the daily, we are still looking for then preferably another high to finish the blue wave 3 and then move to the downside in 4. On the 1 hour time frame, we are then looking for 1, 2, 3, flatter in 4 and another move to the upside in a wave of 5. The invalidation is the 0.618 taken from the low of 2 to the high of 3, sitting at 102.5k. What we want to see is a 5-wave impulsive structure to the upside, hitting the common target area for a wave 5, which is between 108.9k and 111.5k. In that particular area, we then want to see clear signs of weakness for price to move towards the downside and get a bigger retracement. If you then go to the second scenario on the daily time frame, then this is your most bullish scenario. Here we then have a wave 1, 2, look for a bigger 3 to the upside, 4 and 5, with locally 1, 2, 3, 4, but here we get a much bigger 5 towards the upside, meaning that locally here we are not counting this as a 1, 2, 3, 4, 5. No, instead on a 1 hour time frame, we then need to count this as a double 1, 2 in order to get the length of wave 3. So here we then have our 1, 2, and then we look for 3, 4, 5, and inside yellow 3 we then have 1, 2, 3, 4, 5. This is a double 1, 2. Now your second wave 1 in white here is longer in time and in price compared to your higher degree first wave 1. And that does negatively impact the probabilities for this scenario, because preferably in a double 1, 2, your second wave 1 is shorter in price and also preferably shorter in time. Now, of course, that is a guideline. It's not a rule, right? It's not a must, but the fact that your white wave 1 is longer than your yellow wave 1 and also almost twice the length in time compared to your yellow wave 1 does negatively impact probabilities for this scenario. Now, besides that, your common target for 2 is the white box here, 103.5k, 101k. You don't want to hit the 886, that would significantly reduce probabilities for this scenario at 102k. And then over here, 100.2k, sorry. And then the invalidation here is the low at 99.2k. Now the bearish scenario, right, the most bearish scenario would be for price to move to the downside and touch the 618 after a finished impulse, 1, 2, 3, 4, a 5-wave structure. Now touching the 618 here, as we know, invalidates a impulse to the upside. This scenario, 1, 2, 3, 4, 5, that is not allowed. So basically the moment you hit the 1.618, you're either looking for the very bullish scenario or you are looking for the bearish scenario. But because the probabilities in the bullish scenario are negatively impacted by the second wave 1 being longer in time and price compared to the first one, it obviously also increases therefore the probabilities for your more bearish scenario, where you then count a 5-wave finish structure to the upside and you are looking for continuation to the downside. Now we do have some support to the downside, and you can see that my red line actually found support on the box over here. So to the downside, between 100.9k and 101.5k, we have an area of support, which includes a weekly naked point of control, very interesting, and also a daily here, as you can see. So that would be an interesting area for me to keep an eye on a potential bounce, and just below there you have the daily naked point of control and the daily. Now what is important in this particular scenario is that once price eventually finds some support somewhere and creates a bounce, as long as you do not take out this low here to invalidate the very bullish 1212, you have to be very aware of the bounce to the upside. If this bounce is corrective, a three-way structure, you're looking for continuation to the downside. However, if price over here finds support and moves to the upside impulsively with a high amount of volume, you have to be aware of the more bullish scenario, even though the probabilities are not really on that side. Now on a daily time frame, your bearish scenario on the 1 hour translates into what you see here on my chart. So in this case, we then have a 1, 2, 1, 2, 3, 4, 5 finished here, finished wave 3. Then you look for your 4 and 5. Target area 96.7k to 83.6k, but then again keep an eye on the lower degree price section of your wave 4 here, giving you basically a bit of a minimum target being 90.7k. So let's say the 382 to the 0.236 will be your most important target area, after which you want to see impulsive continuation to the upside in a wave 5. From a CVD perspective, we made the high yesterday, move towards the downside, and for me overnight, price created some nice bearish CVD divergences with a local bearish market structure. That is exactly what you want to see. Unfortunately, I was asleep. So now price is down here. You can see there's a bit of bullish CVD. However, we don't yet have any market structure to the upside. So I would definitely take this with a grain of salt, because preferably you do have a market structure to the upside and then you create some more bullish CVD divergences, like over here for the bears. Down, up, another lower low over here, lower high, bearish CVD. That is what's interesting, right? So keep an eye on the CVDs. With regards to news, I will be live on YouTube when the news hits here. Wednesday, December 18th, today, 2:30 p.m. Central European time. So I'll be live in the afternoon. And then we have 8 p.m., 8:30 p.m. I'll try to be live. Usually in the evenings, of course, I am not live, but let's see what happens with regards to price action. And around 8 p.m., if anything is up, I might consider going live there as well. So just make sure that you write these times down, or you put some alarms on your chart with vertical lines, because the volatility on the chart might increase because of it. If you then look at the probabilities, then on the daily time frame, the two scenarios that lead to a retracement in a wave 4 have the higher probability, which means the two blue lines here have a higher probability than the line in green. The line in green is locally the 1212 scenario, which has lower probabilities, right? On the 1 hour time frame, the probabilities depend on the 0.618 here at 102.5k. If you move to the upside without touching the 618, we're looking for a wave of 5 and then a retracement to the downside. That's the blue line. If you do hit the 618, then we are looking for a move to the upside correctively in the red line. So find some support and a 3-wave corrective structure to the upside for then more downside. And if you touch the 618, but price moves up very impulsively with a high amount of volume, we have to consider continuation in a more bullish scenario. However, after touching the 618, the probabilities do increase for the bears compared to the bulls due to the size of the 1212 as explained in the analysis. So to make it easier, move up with no 618, blue line, move down to hit the 618. We look for a bounce both in green and in red. You are of course looking for some support and then a bounce to the upside, which can be interesting to trade. But then depending on the structure of the bounce, we will know what is next, red or green. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.